Okay, so you want to own a funeral home. You picture a large, dignified building on a quiet road. A black hearse waits beneath the entrance. The chapel is calm. Flowers are arranged perfectly. Families arrive, your staff guides them through one of the hardest days of their lives, and the business earns steady money from a service every community will always need. People may stop going to cinemas. They may delay buying a new car. They may cancel subscriptions and cut almost every optional expense. But people do not stop dying. From the outside, that makes a funeral home look like one of the safest businesses you could own. Demand is permanent. Customers cannot postpone the service forever. And unlike a restaurant or clothing store, you do not need to convince anyone that the service is necessary. Here is the catch. Death is predictable at the population level. It is completely unpredictable at the level of one building. Your funeral home may receive 6 calls in 1 week and none the next. 2 families may choose traditional funerals with viewings, ceremonies, caskets, hearses, and burial. The next 4 may choose direct cremation with no chapel, no embalming, no procession, and almost no merchandise. Your building, vehicles, licenses, insurance, refrigeration, and staff cost roughly the same in both weeks. So a funeral home can serve more families than it did last year and still make less money. It can operate in a market where the number of deaths is increasing and still struggle to pay its debt. That is the real economics of owning a funeral home. The United States has roughly 15,000 funeral homes, and most are still privately or family-owned. The industry generates billions of dollars in annual revenue, but the service mix supporting that revenue is changing. Cremation is now the majority choice in the United States, while traditional burial continues to decline. A funeral with viewing and burial can cost several $1,000s more than a simplified cremation. And within the cremation category sits the cheapest option of all, direct cremation, where the body is cremated without a formal viewing or ceremony with the body present. That difference changes far more than the family's bill. It changes how much of your building gets used, how many staff hours are required, whether the hearse leaves the garage, whether a casket is sold, and how much revenue is available to support your fixed costs. Before we get into the numbers, we need to define what a funeral home actually sells. It does not sell death. Death arrives without your help. It does not mainly sell caskets, even though caskets are the most visible product in the building. And it does not simply sell a ceremony. What a funeral home really sells is certainty during a period when the customer cannot afford confusion. A person has died. The family may have only a few days to make decisions involving legal documents, transportation, preparation of the body, burial or cremation, religious customs, flowers, notices, music, relatives traveling from other cities, and family members who may not agree with one another. The family is not buying one product. It is buying coordination. It is buying the assurance that the right person will be transported from the right place, identified correctly, cared for properly, prepared according to the family's wishes, and finally buried or cremated without a mistake. Most businesses can correct an error with a refund. A funeral home often gets one chance. That is why trust is the real product. The building, hearse, casket, flowers, and paperwork are simply the tools used to deliver it. The model can range from a full-service funeral home with a chapel and preparation room to a small cremation-focused provider. A full-service operation earns more per traditional case, but carries more building, staffing, and vehicle costs. A low-cost provider earns less per family and must survive on volume. The first major decision is whether to build a funeral home or buy an existing one. Buying an existing operation is often the more logical path because the most valuable asset is not the hearse or the chapel. It is the name on the sign. You are paying for relationships with churches, hospitals, hospices, nursing homes, cemeteries, clergy, florists, and local families. You are paying for the telephone number people already know. You are paying for the fact that grandparents used the business, then their children used it, and now the next generation assumes it will use it too. This is goodwill. And in funeral service, goodwill can be worth more than the building. A new funeral home starts with none of it. You may build a better chapel, install better technology, and offer lower prices. But when a death occurs at 2 in the morning, families rarely begin by comparing architecture. They call the name they remember or the business recommended by someone they trust. And then you need working capital. This is where first-time owners make a serious mistake. A restaurant can run an opening promotion. A gym can sell discounted memberships before opening. A funeral home cannot manufacture demand without appearing deeply inappropriate. The business must remain available and fully ready until the calls arrive naturally. While you wait, the mortgage is due. Payroll is due. Insurance is due. The building must be heated, cooled, cleaned, and staffed. Refrigeration must work. Vehicles must start. The phone must be answered every hour of every day. This is a high fixed-cost business attached to irregular demand. Labor makes that structure even more difficult. Deaths occur at night, on weekends, and during holidays. Someone must answer the call. Someone may need to travel to a hospital, home, or nursing facility. A licensed director may need to meet the family. Services may need to happen quickly around religious customs or relatives arriving from overseas. A small funeral home may reduce payroll by having the owner perform several jobs. The owner answers the phone, meets families, manages staff, handles paperwork, supervises preparation, directs ceremonies, reviews contracts, maintains community relationships, and checks the building when an alarm goes off at night. That lowers payroll. It also means the owner did not buy a passive investment. The owner bought a profession that can call at any hour. Now we get to the revenue. But the total bill is not the amount the funeral home keeps. Some money may pass directly to the cemetery, crematory, florist, clergy, newspaper, musician, or government office. A $10,000 contract can contain thousands of dollars that simply move through the business. The basic services fee is the financial foundation. It helps cover the cost of remaining available around the clock, maintaining licenses, coordinating arrangements, filing permits, and keeping the operation ready. Then there are labor and facility charges. A viewing requires preparation, room setup, staff, cleaning, and hours of building use. A ceremony requires coordination, vehicles, equipment, scheduling, and additional personnel. Then there is merchandise. Caskets, urns, keepsakes, flowers, memorial products, and printed materials can add meaningful revenue. But this revenue is not pure profit. The products must be purchased, delivered, handled, and sometimes stored. The casket is where the old business model becomes most vulnerable. Families can buy caskets from outside retailers, and direct cremation does not require a traditional casket at all. Cremation removes the casket from many transactions entirely. So the product that once appeared to be the center of the business is becoming less dependable. The strongest funeral homes are not built around casket markup alone. They are built around professional fees, trust, efficient operations, and services families still value, even when they choose cremation. Because cremation does not eliminate memorialization, it changes the form. The opportunity is no longer to force cremation families into the old burial model. It is to design services that make sense for the choice they already made. That shift is financially necessary because cremation usually produces lower average revenue than a traditional funeral. Imagine your building was designed 20 years ago for a market where most families selected embalming, 2 nights of visitation, a chapel service, a hearse procession, a casket, and burial. Now, most families choose cremation. Your chapel sits empty more often. The hearse leaves the garage less often. Casket sales decline. Yet, the mortgage, roof, parking lot, insurance, and basic staffing remain. The building was financed by yesterday's service mix. The customers are buying tomorrow's. This is why the operator cannot measure success only by the number of calls. A 100-call business with strong average revenue, low debt, and disciplined staffing can outperform a 200-call business with heavy fixed costs and a low-price service mix. More deaths do not automatically mean more profit. The quality of the revenue matters. One way funeral homes try to make future revenue more predictable is pre-need sales. At-need business begins after a death occurs. Pre-need business begins while the customer is still alive. A person selects services years in advance and funds the arrangement through a trust or insurance product. For the family, this reduces uncertainty. For the funeral home, it reserves future market share. A customer who has already arranged and funded a funeral is less likely to use a competitor later. But pre-need money is not free cash. The funeral home may wait years before delivering the service and recognizing much of the revenue. During that time, labor, fuel, caskets, utilities, and insurance become more expensive. A guaranteed price contract sold too cheaply today can become a low-margin obligation years later. Pre-need is both a sales engine and a future liability. Scale helps manage these pressures. A large operator can share preparation facilities, vehicles, managers, accounting, marketing, and on-call staff across several locations. If one chapel is quiet and another is busy, employees and equipment can move between them. An independent funeral home carries many of those costs alone. But the independent has one advantage the chain cannot easily manufacture: local trust. Families may prefer a specific name, neighborhood, religious connection, or director. That is why large companies often buy local funeral homes and keep the original name on the sign. Now let us do the math. These are illustrative numbers, but the structure is what matters. In a strong year, your funeral home serves 180 families. After excluding money that simply passes through to cemeteries and other third parties, your average retained revenue is about $6,100 per family. Total retained revenue is approximately $1,098,000. Merchandise, preparation supplies, and outside services consume $210,000. Payroll, including the working owner's salary, licensed directors, administrative help, and on-call coverage, takes $330,000. The building, utilities, property costs, cleaning, and insurance consume $130,000. Vehicles, fuel, licensing, technology, and administration take another $160,000. Maintenance and replacement reserves consume $55,000. Operating profit is about $213,000. Then annual loan payments consume $110,000. The business produces about $103,000 in cash after debt service, in addition to the working owner's salary already included in payroll. That is a good year. Now, change only a few variables. A low-cost cremation provider enters the market. Calls fall from 180 to 150. More families choose simplified cremation. Average retained revenue falls from $6,100 to $5,300. Annual retained revenue is now $795,000. Case-related costs fall because you are serving fewer families, but payroll does not fall much. You still need licensed staff, on-call response, administration, vehicles, refrigeration, and a building ready for the weeks when several deaths arrive at once. Total operating cost reaches approximately $795,000. The business is at break-even before debt. Then the $110,000 loan payment arrives. You lose $110,000 in cash for the year. Nothing catastrophic happened. No lawsuit, no scandal, no major mistake. You served only 30 fewer families, and more of those families selected lower-priced services. That was enough to turn a six-figure cash return into a six-figure cash loss. This is why owning a funeral home is not automatically recession-proof. Permanent demand does not guarantee permanent margin. It is not passive because death does not respect business hours. And it is not protected from disruption because cremation, direct providers, online shopping, and changing family expectations are rewriting what people buy. The greatest risk is building the business around what funerals used to look like. The greatest opportunity is understanding what families still need, regardless of the form the service takes. They need legal